Good evening, everyone. Good evening and welcome to my weekly analysis. I'm looking at commodities, and this is for Sunday evening, the 22nd of March 2020. And just to kick off, just in case you don't watch all my videos, first of all, please, I really hope you're taking this virus seriously and all the precautions that come with it. I know not everyone is, and this is a very serious global pandemic. If we don't take it seriously, it's just going to wipe out people that you care about. So please do sensible and responsible things and don't dismiss this. All right, take it seriously. All right, so starting off here, as I said in the dollar index recording, there is not going to be any solution coming out of Trump's administration. They don't know what they're doing, with the exception of one person, which is the Dr. Fauci. So with that exception, otherwise they don't have a clue that what they're doing. So, but the individual states are starting to take control of the situation and showing leadership. And so in terms of responsiveness from the US, we will see it. It just won't be coming from the top. It will just be coming from the individual states who've now taken control and are managing it themselves. And of course, that's amazing. That's fantastic. And so the point being is that the current conditions, as volatile and crazy as they are likely to be this way for a while. We might have some quiet patches throughout the remainder of 2020, but we are likely to have hiccups when we get a bit of light at the end of the tunnel. The markets might be buoyant, and then if suddenly there's the virus, the potential cure for the virus doesn't work, then we could find markets go into a bit of haywire again. One thing that has become abundantly clear is that the markets have no confidence in Donald Trump. So effectively, the markets are operating on their own mechanisms now, and they are not, so if you're sitting there thinking that Trump is driving the markets, he's not. Whether or not he's benefiting from them is not really the point. He's likely lost any chance at being re-elected in 2020 at this point in time. So that's actually all he really cares about, and I don't really think that's not going to happen at this point in time. Unless suddenly things look better under his leadership. Can't see that changing. Anyway, point is, let's go through and have a look at the commodities. I'm looking at gold. Gold has had a really big move down. It's come down to a very solid weekly, significant horizontal level, and could potentially bounce back from that. The nice bearish candle on the monthly puts me back in the buy zone. I'm happy with that. So I'll be looking for some potential bullish formations, which means looking for an uptrend on the 4-hourly and to see the daily head up towards here into the previous level of support at 1550, which is a 382 fib retracement level. So it may, in fact, if I find a bearish candle this week, I may consider shorting that over the coming week. Then having a look at the at silver. Silver, I'm more prepared to continue to short, looking for that to come back up and test that 14 level as well, potentially. So bearish candles, nice rejection candles in this area might be a shorting opportunity. As I head towards copper, I'm definitely now more bearish. Strong monthly downtrend, weekly downtrend. It is overextended. I need these retracements to come up. Nice strong bullish candle there, but looking for shorting opportunities perhaps towards 2.48 or 2.50, so to speak, or into the area here into monthly or weekly support levels. Okay, platinum also looking quite bearish as it is also overextended. So basically it's the same as with some of the dollar pairs there. I'm looking for pullbacks and then looking for continuations of the trends as they are. Palladium as well. Palladium's now back in this area. So same as with gold. And with gold and palladium, there's a possibility that they may be able to recover from their monthly levels. But for the rest, I'm looking for that continuation. Then look at oil. Oil's actually looking pretty much ready to go now. So my expectation, potentially, they are definitely overextended. They are absolutely do need to retrace. However, at the same time, their daily charts have both produced both Brent and West Texas, so UK and US crude, have actually set up with bearish shorting signals. And actually, I really like the look of Brent to short that for as a potential swing opportunity to the downside. It's at historic levels, so these are the reasons not to take the trade. It's overextended on every single time frame. It is at key support levels, and so it is overdue for a retracement. Okay, so those are big reasons to do it. Reasons for me to consider taking the trade. It's a nice little bearish candle that's underneath, effectively finding resistance at a monthly support resistance level. And the momentum indicators seem quite happy. So there are both reasons to take it. So it's effectively a slightly higher risk trade, but I still like it as a potential setup. Then having a look at Bitcoin. Bitcoin is actually looking pretty good as a potential shorting opportunity. I like Ethereum as well as potential shorting opportunities. I could see there's a level of historic support on the monthly, and therefore price might not want to go lower. But at the same time, there's a nice downtrend certainly on Bitcoin. It's potentially looking bearish at the previous lows here, and therefore I might be looking for shorting opportunities to see this head back down towards 5,000 or potentially lower. But as I said, it's a commodity as such, and it might already be near the bottoms and therefore looking for a support. So if I find that it disregards this area here and starts hitting climbing high without triggering me short, then I will reassess this towards the end of the week. But for now, the price action itself is bearish across the board.